Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 9th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. As I mentioned last time, I'm gonna try to keep the advertising down as much as possible. So I'm gonna mention it at the very beginning and the very end that I am using my own MasterChartsTrading.com trading indicators, so you can use them. I'll show you in just a second. Stocks overcame resistance on the 4-hour charts. You can use my indicators to trade on the 4-hour charts. It doesn't matter, but I think the new highs are very likely for S&P 500. Same goes for NASDAQ as it approaching new records. Small caps is actually outperforming finally. I mean, they've been dragging for a long time, and this is a very good sign for the economy if you look at the fundamental analysis. Many sectors and many industry groups are actually at new highs or are approaching new highs, such as discretionary, healthcare, biotech, transport, and semiconductors. So junk bonds are also confirming this move higher, as they also move higher together with stocks. Stocks and junk bonds correlate highly to one another. And we'll look at dollar index as it failed to break out again on 4-hour charts. I don't normally trade on 4-hour charts, but it's just a really cool action, and I wanted to share it with you guys. And as a result, gold and silver could be headed again to the new records. Last week I said oil might be ready to collapse. It clearly didn't happen, but we'll just look at the 4-hour action, and I'll show you why it is difficult. Ethereum is looking promising. I actually have a position open. Okay, so once again, briefly, these lines in the chart, the green, blue, red, and yellow lines, they show good support and resistance levels, and they are clearly obvious, and these levels are generated by a indicator. It's a code. In other words, I didn't just use a line and draw it in. No, it's not a line. It's an actual mathematical model. So with these indicators, what are we looking for? We're looking for good support and resistance. For S&P 500, we can look at 4-hour chart. A continuous instrument such as S&P 500 futures can indeed be traded on the 4-hour charts using my indicators. However, if you're trying to do something like S&P 500 ETF SPY, it will not work because notice it looks completely different. Also notice that there are gaps between the candles. So these are opening gaps. So do not use my indicators to trade like day trading of stocks. I do not recommend it to begin with, and definitely do not use my indicators to do that. However, if you have continuous instruments such as Forex, futures, commodities, continuously, you see there are no gaps here. So S&P 500 is a continuous instrument. It trades pretty much continuously non-stop. So on this chart, this is a 4-hour chart, you can see. You can see that there is a breakout where I'm hovering right there yesterday on October 8th. So, this candle here from the 6th of October, big candle, President Trump said something about end of negotiations, then something else happened, and this whole thing got completely negated. And in fact, now, even on the 4-hour chart, it is back in an uptrend. So how do I define an uptrend? An uptrend is when a stock or a security closes above the blue line. Now, an uptrend can be, or a downtrend. So, for example, here is a downtrend where I'm hovering 17th of September. And from here on, we would have shorted it. Stocks in general have a tendency of going higher. So on daily chart, it's pretty clear. We have a breakout that occurred back in April. Now, why did I see that particular day as a breakout? It's clearly visible in the chart. That's why I like my indicators. I don't want to think. I hate thinking. As weird as that sounds, but like in trading, the less you think, the better the results. Because like if you start putting on some moving averages, and you start analyzing, like, somebody said that, and then there is the GDP of such and such thing, or something else happened. Don't bother. Many years, I started back in 2014, I think, and I thought before back then, I was like, oh, okay, maybe if I look at the events, then I will definitely beat the market. It's like, for example, big announcement that something is happening with the dollar, or perhaps the Federal Reserve will, lower the interest rates, or they will start quantitative easing, or whatever. None of it really makes any difference, so long as you can pay attention to the chart. See, back here on this chart, back in February of this year, let's say an alien came from the, some other place, outer space, and they're like, well, I don't know anything about this stuff, but it does look like it's dropping, so shouldn't I exit? Yes, you should exit. So our previous trade from way back when was quite successful. We entered way back in 19th of February, in 2019 in February. And here, I already kept saying this, but back in February, March, there were some allegations of people, insider trading, or something like they were in the cabinet with the president when they were about to announce. I'm like, why bother? I don't need to do anything. I just look at the chart. See, there's the exit. So that's where they exited as well. Those people who were accused, the senators were accused of insider trading. The truth is, you don't need any of it. So, again, if we knew nothing, and if I came from some other space and look, okay, I'm just going to do nothing here. I'm going to exit right there on the 25th of February, the old position if I had it, and I just would do nothing here. Now, knowing that stocks generally tend to go up, and I know that this is a stock, I looked at this opportunity here on the 27th of March, and I thought to myself, do I want to bother? And I was like, no, I don't want to bother. So I did nothing. That's why it's a purple arrow. If it was a red arrow, we would have actually shorted, but I didn't really want to bother. And I was absolutely correct, because just a few weeks later here in April, and then later on again in May, we see the breakout. So the breakout is what? What is a breakout? The breakout is a close above support resistance lines. In this case, it was a blue line. So my blue line is an excellent support resistance, especially for stocks. But then again, for many different instruments, I trade pretty much all of securities using my indicators with quite high success rate. I get 70% positive results, and I win $3 for each dollar I lose. So profit factor of 3.0. Very, in my opinion, good enough. Robots could potentially do more, maybe. I got into recently getting into options, and I'm improving my profit and loss even more. In any case, right now, back here in April, why did I think it was a breakout? I didn't. I removed my brain, basically, and I highly recommend you do the same. Remove your brain as much as possible when trading, but you do need to know where to put your stop, how many shares to buy, etc. And I teach you all of that stuff if you're interested. That's called risk control. So got risk control and system. The system says buy and close above the blue, and then trail higher. So currently we're looking at S&P approaching the records. I mean, it's just nothing. It's like 3% from the records. So we're most likely gonna break out. This sure as heck looks like once it breaks out, the depth of this pattern is 11%. So it's very easy that it could move that much again after the breakout, so breakout from this level, so we could be easily looking at around 4,000 for S&P 500 in the near term. Who knows what's going to happen later, but I mean, it's a bullish chart, so in other words, we do not want to be shorting it, we only want to be thinking about buying opportunities. Where are the good buying opportunities? In my opinion, the best buying opportunities is a deeper pullback around the blue line. It never occurred, so we had a all-time records, pulled like halfway through, and then looks like it's going to continue higher. So NASDAQ, here's where NASDAQ QQQ. So NASDAQ back in April, there's the alert. Huge move, obviously, you can see it's 43% move for the average. I mean, yeah, it's definitely weighted towards the top more, Apple, Google, Facebook, etc. But still, it's not just Apple, it's multiple stocks in the NASDAQ QQQ. So big move right now, kind of very similar to what's happening with S&P. We pulled back to just kind of nowhere, but looks like we're going to continue higher. Now, if I entered back here on the 15th of April, I would have probably taken some profits here, but I would have kept a position still most of the position open, and I would have trailed at the blue line itself. If we make new records, we'll just continue higher to trail it. Small caps, IWM. So finally they are outperforming. They are still sort of underperforming because we can see 52-week highs. We did not make yet 52-week highs, but what I really like is this latest move. Again, you can see the up blue arrows. These are actual alerts. The latest one was right there on 24th of September. That's good for 13%. So why do I think it's outperforming? Because if we look at S&P from the same period, it's about 7% from the 24th of September, while the small caps moved 13%, so double basically. In general, this is a very good sign because this is showing that small caps, small companies are participating in this stock market advance. Small caps are, there's many people who are employed in the small cap firms, and in general, they're, more, I guess, important for the economy. They are very important for the economy because there is a lot of them, and a lot of people work in the small caps. And this is just showing that if small caps are actually outperforming, this is showing strong participation. This is showing strength in the general economy, I would say. Again, I'm not a fundamental analyst. I'm not any kind of analyst that would sit there and think that they're very smart. I am not. I'm serious. I'm removing my brain as much as possible, and I am looking at the lines as much as possible. And notice that it is just so much easier if we don't have to think about all of the stuff I just said, like, oh, what about the economy? Then we just look at the lines. There's the actual alert. There's the entry. Much easier. So a few examples I wanted to show of recent price action. Some people, say, oh, look, it's just going to collapse. Stocks are under pressure. There's all these terrible things happening in the world, and politics are just off the wall, and things are just terrible. Now, I agree in that sense. I agree, but if I look purely at the stock market, I wouldn't know. So here's Excel Y, consumer discretionary, and consumer discretionary actually are extremely important because this is as economically sensitive as it gets. People don't spend on discretionary items during a very hard times. So the way I'm interpreting this chart is that somehow the economy in general is not looking that bad. Although millions of people are still unemployed and they're not getting unemployment, and they may soon get kicked off of the unemployment. There's all kinds of bad news basically happening. I can go on for hours and hours of kind of bad news out there, but it will be counterproductive. So the only thing that I want you to understand is that in technical analysis and in general in trading, the less you think, the better. So in this case, you can see that there's a clear bullish chart. The bullish chart for this one began back again in April, and we're approaching new records. So this is a very good sign. XLV healthcare. So also it's a little bit sideways action, but then again they were at records. These are record highs back in September, and we're approaching record highs again. So for XLV healthcare, most likely this has to do with strong performance for biotech. So here's IBB, largest one out there, or rather this ETF is skewed towards large caps. The XBI is kind of more balanced, and you can see XBI is actually very close to new records, all-time record highs. But I wanted to show IBB, NASDAQ Biotechnology. So notice how easy it is. And if I showed it to my son, for example, he was like, well, there it is. There's the touch on the 4th of September. And that's all we need to do. We just look for a touch of the blue line and then a close above it, and we buy. So a few weeks ago, actually, I'm on StockTweets, and Twitter, somebody on StockTweets mentioned that somewhere around here, like around the 3rd of September, that's it. The biotech will just collapse. And I'm like, doesn't look that bad. In fact, it looks really good. So I actually went ahead and I sent an alert to my subscribers. I posted this. I'm going to repost this as well on StockTweets. You can find me on StockTweets. But yeah, this is how it works. It just the support and resistance lines, they work super well. Super easy and very obvious. So biotech, there is right now pandemic, if you haven't heard, and obviously healthcare should be a beneficiary of this. With all the vaccine developments and potential drug developments for the epidemic. Now, so just look for opportunities. Don't overthink. This is an opportunity, and I wasn't overthinking it. I just went ahead and let's just buy it. And another very positive sign is transportation sector. Also, this is a 52-week high, not a record high, but still it's a 52-week high. So, straightforward. In fact, this IYT trade this is a breakout trade, because before it was, you can see it was closed below the yellow lines, in other words, 52-week high, lows rather. And then there's the breakout on the 5th of June, and from then on we just keep buying. In fact, we bought FedEx as well. This thing is just monster move. 84% move. So it was actually 71 here, but now it's 84. UPS more than 58% move in our favor. So notice it's just very nice, very easy. See how easy it is? There's the alerts. See, very easy. It's obvious. And then for traders, I think, especially for new traders, but even for old hands, I mean, why do you need to rack your brains when you can have just easy things in front of you? So this is what I keep doing to my trading. I simplify as much as I can. Another record high for XSD semiconductors. So semiconductors is a volatile sector, yet it is at record highs. It's showing, if we go to the fundamentals, it's showing good demand. People want to buy stuff that semiconductor firms make. We started trading it back in May, and there's the actual alert back in May, and now it's up 41%. And brain dead, basically. Do nothing. Just sit there. All right, from a more fundamental point of view, we can look at junk bonds, JNK. There's also another one called HYG. So as early as April 9th, and you can listen to my videos back then, so this would have been actually April 9th video. You can look them up on my YouTube channel. I put this arrow up there, right there, and I was like, okay, I'm gonna be buying. Federal Reserve said they will be buying junk bonds. In fact, they are buying this particular ETF. So I said I'm gonna be buying it as well. So I started buying it into my retirement portfolio. Here I sold a half, but there are other opportunities. So I'm not really worried that I already sold half. What I'm more worried about is I do not want to have a losing transaction if I have a winning transaction already. So like, let's say the stock went up and then it came down, and I'm like, but I already had a winning transaction. Why did I let it go down? So this is the reason why I just take profits, advance to stop, take profits, advance to stop. If I get stopped out, not a big deal, because honestly there's so many opportunities. I don't have enough time or cash to manage every single one of them. Ideally, we were working on a robot. The robot is trading cryptos right now. We're hoping that robot will be transferred to another service called Alpaca, ALPACA, like the animal alpaca. So it's a kind of new service. It's coming up. We haven't actually tried to program there yet, but it is doable. What's really nice about Alpaca is that you can trade stocks programmatically. So we're working in that direction where we're going to create an API and then start taking money under management through the API. It hasn't happened yet, but you can start signing up already and on the waiting list, basically. All right, so let's switch gears and let's look at some of the Forex action. DXY here is dollar currency index, so clearly in a downtrend. So for continuous securities such as Forex, commodities, cryptos, but not stock futures, I use the red line and the blue line only to set my direction, I guess. So when a Forex instrument such as DXY closes below the red line, it means it's in a downtrend. Excuse me. So a couple of opportunities to sell was here on 2nd of June and then another one on 30th of June. Now currently we're around the yellow line, so we're basically around 52-week lows. And this move from 21st of September into now, I wanted to show on a 4-hour chart, so we can change this to 4-hour chart. And notice this breakout. So I actually showed this breakout before, maybe last week. Here from 21st of September, you can see a nice move higher. So this would have been a very successful trade. You just got to get out. So you get in right there, and then you get out. Where do you get out? Hopefully at the top, but if you cannot guess where the top is, you can get out before the below the green line. So it still would have been a profitable trade for you. So this mass here from maybe 30th of September until now, I kept thinking that we're gonna go higher, we're gonna go higher, we're gonna go higher. We didn't. So we're currently approaching, and this is a 4-hour chart, remember. On the 4-hour chart, we're approaching, just a breakdown point, which is at 92.87. So if it breaks below this line, new lows are almost a guarantee. On daily charts, it's not that far off. So if we look on the daily charts, this yellow line, I don't really like to use it as a signal provider. I like to use a red line or the blue line. So for me, see those downward yellow arrows? They're just there showing that if you're super aggressive and you think that dollar will collapse lower, and you may not be wrong, by the way, then you could have shorted it back here. I personally don't like it. I like to short at the red line. It hasn't even happened, so we're just gonna have to deal with it. So the way dollar is acting looks like it's gonna continue lower and most likely break the September 1st low. If this happens, then we will be looking at precious metals. So precious metals, this is gold. You can see a huge move on gold. Again, we caught this move. In fact, I caught some of it, GLD. So I bought GLD back 23rd of March, sold partials, and then finally closed the position. Very close to the top, by the way. But right now, gold did not come down far enough. It came so close. Just a few cents. But there was no trigger. So if I had a position from way back, when, from here, from 20th of March, I would probably kept it open because I would have my stop at the blue line. But the way it's looking right now, I think it might actually go to new records. Especially silver, XAG USD. So I bought myself SLV, and I bought it right there on the 23rd of September at 21.70. It went in my favor, and I sold a quarter here, and then I advanced my stop. See what I did here? So at this point, on the 5th of October, I opened the 23rd of September. On the 5th of October, I'm gonna zoom in. So I bought right there at 21.70. On the 5th of October, my target was reached. My target was quite small. I advanced my stop to entry, and I sold a quarter. At this point, I cannot lose money, basically. It could gap against me, but it happens quite rarely. So with this technique, if I sell at least a quarter, sometimes half, I can guarantee myself a profit, and I want to guarantee a profit. This is what I want. This business is about making profit, and I want a guaranteed profit, right? I don't want a profit on paper. So I guaranteed myself a profit, and then I got stopped out. Unfortunately, just barely. If I didn't get stopped out, I could have probably been sitting still in the position. Regardless, this is how things are. So if you bought here on 24th of September, didn't get stopped out, and you're still sitting in the position, congratulations. Perhaps we're gonna see new highs. Okay, oil, CL1 exclamation point. So briefly, let's go to 4-hour charts. On the 1-day charts, there's just nothing is happening. It's basically been trading sideways. So if we look at 4-hour charts, yes, you can trade oil, you can trade continuous instruments intraday. Intraday meaning less than 24 hours. I like 4-hour charts, to just kind of analyze. Sometimes it's helpful, sometimes it, over analyzing. So I try not to, but sometimes we can't help it. So this chart back on the 29th September here, late September basically, yeah, you had a nice trade. It was indeed profitable. You could have, shorted right there on the 1st of October. So then I'm writing, a blog post, and I wrote oil about to collapse, because I thought it's gonna come up like this, back on 5th of October, and then close below the red line. Clearly it didn't happen. In fact, the opposite thing happened, and we closed above the blue line, and this is a long signal. In other words, I want to be buying here at this point. I don't normally trade oil, especially in the 4-hour charts, because you need special account and all that. But just judging from this particular chart, looks like we have a breakout, but it could be the same thing as we just had back in September. Look, there's a breakout and it didn't go anywhere. So let's see what happens. Somehow I still think it could collapse lower. It's been kind of going higher and higher and higher. I mean, this is a nice move from 14th of May, about 50% move in your favor, but we'll see. So currently oil is a difficult chart. So if it's a difficult chart, don't trade it. If you don't like something about the chart, move on to a new one. I'm serious, there are hundreds of opportunities every day. I just don't have the time to even go over many of them. So not sure why bother with things like oil, but people like it. Okay, Ethereum coming to a close now. So Ethereum looks good. Why do I think it looks good? So Ethereum broke out back on 29th of April. You can see right there, close above the blue line, 3 alerts. So we kept buying it, buying it. This was like 100% move, I think, if I'm not mistaken. 120% move. And then it came down to where I want to be buying it. Why did I want to be buying it around the blue line? Because this is a significant selling from the highs. It went up to, on the 1st of September, went up significantly higher here, and then it sold off. So I wouldn't want to be buying up there in September, but it did come down to, good price level. So I went ahead and I bought myself here at the end of September, and I'm still sitting in the position. For now, it looks good. I think it could easily make new highs. I mean, I don't see why not. But anything is possible, so I'm sitting, in the position, but, if it goes higher, it will reach my target, and I will advance my stop. And if it closes me out, then I will say, oh well, and I will move on to a new opportunity, and there are so many of them. Alright, so this is it for this week's recap. Please head over to MasterChartsTrading.com. You can also go to everyonecantrade.com. It'll go to the same place. So we have 3 different products here. Newsletter, trading indicators, and the ultimate bundle. So some of the things that used to be in the newsletter were moved into the ultimate bundle. For example, Forex, commodities, gold, and stock screener, and the new stock speculator newsletter. So this is a new thing, and it's starting up, I guess. I'm still having a little bit of technical difficulties, but bear with me and we'll solve everything. Indicators, yes, you can have them for tradingview.com. So these indicators, green, blue, red, and yellow line, they are available for you. Go to MasterChartsTrading.com or Everyone Can Trade, sign up. I will open the door for you on TradingView. You only need a free TradingView account to enjoy my indicators, but you do need to sign up on my site. Newsletter, so again, various alerts about things like I don't know. Let's see. What was good? XSD, semiconductors. This is an actual alert. Good for 41%. Solar, latest beautiful move. 119%. Alerts were sent right there in June, and look at this move. Amazing. So these are called alerts. You get lots of them in the newsletter. Usually I kind of separate the newsletter with the common stocks, common ETFs from the more uncommon things like cryptos, commodities, and gold. So this is the reason why I separated them out, because not everybody trades commodities, gold, and forex and cryptos, but the vast majority of people do trade ETFs and common stocks. All right, so that's it for this week's recap. Again, if you have any questions, please, you can find me on social media. I have TradingView, Twitter, Facebook, YouTube, and StockTwits accounts. If you don't find me, send me a message. You can send a message here. Also, we have affiliates, so you can sign up to receive commissions, and anywhere from 30 to 45%. So sign up, and we'll see you there. Thanks for watching, and have another great trading week. Bye-bye.